Maybe I'm just too cynical.
Yeah, Tarun is the jaded member of our podcast.
I think the problem with you, Tarun, is that the moment things are going well for you, you start reflexively finding things to be sad about.
Not a dividend.
It's a tale of two Kwan.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we got Robert, the crypto connoisseur and czar of Superstate.
Aloha.
Next, we got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
And finally, I'm Haseeb, the head hype man at Dragonfly. We're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So it looks like we are back into a bull market. We have Bitcoin hitting all-time highs. We have alts rallying. And on top of all of that, we have one of the largest ICOs in history just having taken place within the last week. That ICO, of course, being Pump.fun. So let's talk about it. We've talked about Pump many times on the show. It is the largest meme coin launchpad in existence, and it recently launched its token. Now, its token, as of today, is trading on the order of about $6 billion fully diluted. But it raised an ICO at a $4 billion fully diluted valuation. This ICO was split in some amount of private sale versus some public sale. There was about $500 million that was raised from the public sale, and it was spread across 6 different venues that were centralized exchanges that were offering some inventory of the token that they were selling, plus some that you could buy directly on chain from Pump. What ended up happening was that there was 3 days during which you could buy this ICO at a fixed price, and this ICO sold out in 12 minutes. It was a absolutely insane rush of capital. Multiple exchanges were oversubscribed to the point where apparently they sort of messed up and sold more inventory than they actually had. So both Kraken and Bybit ended up having all sorts of issues with people seemingly thinking that they were approved when they were not, and as a result, they had to do something or other to make people whole. It was kind of a mess. So this seems to have been the biggest ICO we've seen in ages. And it was oversubscribed both on the institutional side as well as on the retail side. We've seen, I guess, about a 25% to 50% pop on the assets since it's now started trading. So it looks like everybody who bought the ICO is in the money. There were about 25,000 accounts that KYC'd on chain. Everybody who bought this was KYC'd, and the US and EU were excluded. US and UK were excluded. So this kind of a crazy moment. It seems to have indicated that we've entered into a different era than where we were sitting before. What's also interesting was that the sentiment toward Pump.fun when they announced this ICO was very negative. Almost everything I saw on Twitter was like, lambasting the team for, you guys are
they're saying $1 billion.
Yeah, exactly. And yet this thing was crazy oversubscribed. The amount of demand, clearly much, much more than they were anticipating, to say nothing of the centralized exchanges.
To be fair, since 2022, I feel like crypto Twitter is like often anti-correlated with on-chain usage, like in practice. It's like it hasn't really been a good signal for like 4 years.
So is crypto Twitter like sort of the Kramer of this industry? Sort
of feels like it, because like everything that has happened that has been amazing this year in terms of performance, like Circle IPO, like nonstop, everyone's shitting on it, like on crypto Twitter. But then when I go out in New York and talk to some TradFi people, they're just like, "Are you guys aping into this IPO?" And I'm like, "Wow, this is just like a completely different universe."
Were the TradFi people aping into the IPO, the ICO?
No, not that into
Circle.
Oh, Circle. Yeah.
I think Circle's a little different because like they were trying to raise money in private markets.
CT has no alpha. If anything, has negative alpha and like some beta. Like its beta is just Bitcoin shilling, and there's a little bit of negative alpha nowadays.
Well, there's a lot of Hyperliquid. I mean, that's like the one consensus CT trade, which has worked.
Yeah. That's fair. Although I kind of feel like. Yeah, it's hard to dispute that one. But I feel like the other ones have been like really bad. The thing is, everyone's so polemic on CT. It's like, it's either like 1000x or 0, right? Like I feel like people were a little more metered before.
I think that's how you get engagement, right? You want a polemical tweet. I think
it's more
like the market
so
speaks.
since Elon took over Twitter, I feel like it's like bifurcated more. Like
I
there
think
was
this is like back in the day. This is bullshit. It's always been like this. I
maybe
totally object to the story.
Yeah, but ultimately, I think you look at the markets, right? And like the pre-launch markets for Pump actually got it basically right. It was trading like a little north of 5.
I was going to bring that up. Yeah.
You know, it's like, yapping is cheap, but people, put their money where their mouth is and was priced pretty accurately.
Well, I actually think that the forward markets led to a lot of demand. So I have a few friends that were monitoring those forward markets pretty aggressively as it was trading around 0.05 or whatever. They were like, okay, like I think there's enough liquidity, there's enough density here. I think this is going to work, to invest in the ICO, hedge in the forward market. And a lot of people, I think, started like actually putting real flow into that sort of arbitrage where they were preparing to buy at 0.004 and sell at 0.005. And I think that led to a lot of confidence in the ICO itself. There was a lot of people who were like, oh, I'm in for $1 million. And I think some of the tickets that we saw the median was extremely high because I think it was a lot of very sophisticated people, many of which were hedged.
But I mean, if you were hedging any real portion of that 500 million, like this thing would have just traded down, right? If so many people were hedging. So clearly most people didn't hedge.
I don't have the data, but supposedly the volumes in these like forward markets were really quite robust.
They were. But I believe that they were like net long. So,
which is
like
cool. That means there's a lot of demand, from people, and it was offset.
Right. Exactly. Yeah, exactly. So, like, my point is that there were certainly some people who were hedging, and I also heard that there were many people who thought that they had got some through Kraken or through Bybit or through one of these other venues, and basically were naked shorting because they never got filled. So there was all sorts of shenanigans that were going on, and apparently, so part of the story here was that. So this was kind of an innovation in market design because Pump is the first one I've ever seen do this, where they syndicate out a sale to multiple other exchanges. Like even during the ICO bubble, when all these ICOs were happening back in 2017, 2018, the ICOs were just happening straight up on chain, right? You go to some website and you register into the ICO.
Or famously, single centralized venues, right? Like Binance grew off the Tron ICO, right? That was like the big thing that they were like around.
Right.
So
this like
it wasn't this
thing.
like multi. Yeah,
that's totally new. I've never
like
seen
market-driven NBBO in some weird way.
Kind of.
It feels like that, right? It's like, oh, like you can use all venues and they all have to price synchronize.
Yeah, well, they're distributors, right? Because they're selling at a fixed price, so it's like they have to sell at some price that you set as the ICO deliverer. And you can imagine worlds where you don't do that, where you have like some kind of auctions or something for each batch of inventory. But my understanding of the way that this worked was that so the Pump team, they were themselves very uncertain about how much demand there was going to be, and they set this whole thing into motion like more than a month before the ICO actually happened. And of course, at that time, the market was in the doldrums, right? Like they ended up actually ICOing when Bitcoin hit all-time highs and alto rallying and all this great stuff was happening in the market. But at the time that they were originally contemplating the sale, market kind of sucked. So in that environment, they were basically planning for the worst. They were like, look, what do we do if this thing doesn't sell out? And they found that that's why the thing was 3 days. Right, it was 3 days long because despite the fact it sold out in 12 minutes, they didn't know there was no way to really test demand. Like they can't really do a roadshow with retail, right? It doesn't really work that way. So they floated this institutions.
What do you mean? This was a roadshow. It
was the same price.
This was a roadshow. All the venues shilled to their customers for a week.
That's true.
No, but they were almost
kind of a
roadshow.
It's kind of a roadshow.
Here's the thing. 450 million of the 500 million was sold directly through Pump. Meaning that all the other inventory was like 10%.
I was making a tongue-in-cheek joke that like if you're doing securities like issuances via an app, you will probably just your roadshow is just like notifications in the app. Your roadshow isn't like going and selling people in suits.
Right. There was no webinars.
Decks. There's no webinar. Yeah.
Sure. Yes, true. I mean, they did release that crazy video. I don't know if you guys saw that. I think it got like several million views. So it was they did. I don't know if I call it a webinar, but they did a video. And the interesting thing was that yes. So the way that this thing was structured was that there were these 6 venues. Plus, you could buy direct on Pump, and each of these venues had a cut. And they had some amount of inventory that they were authorized to sell. And Pump had an API that was sitting behind all of this, that if you weren't guaranteed this inventory, you had to hit the API and basically get a yay or nay that you were good to fulfill this order. And because everything moved so fast, basically this API fell over the moment that the ICO started. And because this API fell over, nobody knew whether or not they were getting filled. So they were kind of like, okay, we've been told that we have 20 million or 30 million or 50 million or whatever of inventory to sell, and we've got all our customers, and we got to respond something that we thought we would get a response within like a few hundred milliseconds, but instead this thing is just 404ing or whatever. So some platforms just basically said, sorry, nobody got anything. And then some like Kraken basically said, oh shit, we thought we were good, and turns out we weren't allowed to sell you anything. And so we have to go and like figure out how to fix the snafu on the back end. So this, I imagine whoever does this next is going to fix a lot of these issues with this market structure. But my guess is that this is not the last time we see this, because these exchanges have now built out this infra. This structure of like, you have these resellers of an ICO, this is not going away.
I think the interesting thing to me is the CT narrative of like, oh, no one is going to list or pay listing fees on centralized exchanges ever again. I obviously think that's not going to be true. But
why are they saying this?
Because there was no.
You have them sell the token; they're listing the token.
Yeah.
Oh, but they didn't get Binance or Coinbase or Upbit.
Yeah,
right?
yeah. And there's no listing. You could tell from like how the choices of quality exchanges. Was that like it was like a no listing fee thing.
But I heard of a lot of people signing up on those exchanges for this ICO.
Probably to buy on chain.
Totally.
Probably to buy on chain.
It's like a marketing thing. It's like a marketing thing, right? It's like having the new hottest listing. It's like, you want access on your preferred venue.
Well, I think this idea of like, I'm a successful app ICOing versus like, I'm just ICOing for some future network is like, that to me is a big change in a way that probably is healthier, to be honest. Obviously, I think like, inevitably, like all things in crypto, it always starts from something with usage and then drifts to things that don't have usage toward the end of the cycle. But like, I think about the like, Uniswap airdrop era of like that being like the, a thing that was used distributing, right? Like Pump feels a little closer to that than it does to like, I'm going to get pilloried by ETH people for saying that, but it's closer to that than like the 2017 fund my L1 in an ETH wallet. Oh, by the way, it's a multi-sig with 2 signers type of thing, right? Like I do think it's better than that. That's all I'm trying to say. Maybe please don't pillory me for that.
It's definitely better than that. I just don't know if either is ideal.
Well, so I mean, the thing about Pump. Pump is also very unique in this. So like the fact that they were able to get 90% of the capital in 12 minutes direct to Pump, right? So not through any of these distribution partners. To me, obviously they could have failed the whole 500 million if they so chose. And again, they probably vastly under valued themselves, because my understanding is that originally they were planning to sell a lot less to institutions, and they ended up selling more to institutions because they weren't sure that the retail demand was going to show up. And the institutions got the same terms as retail, so they were all 4 cents or whatever fractions of a cent or whatever it is, all unlocked from day one. Probably a lot of those people could not have bought immediately. And so there was maybe some like, okay, this demand is demand we can't get otherwise. So maybe there's some rationale there from their end. But I have to imagine that, again, Pump is so well known in crypto. It's probably the #1 most known app in this industry, period. So their ability to get all this demand direct through the front door is probably also not going to be replicated, right? So I'd imagine whoever ICOs next will actually depend more on those distribution partners of like the exchanges selling the ICO.
Haseeb is betting against EOS 2.0. That's what I'm seeing. That's what I'm hearing here.
Listen, it's easy to bet against that because that was like so outrageously large, right? Like at that time, there was how many L1s that were even vaguely credible?
Well, all the L1s were raising in ICOs.
True. Well, EOS was also, remember, like there was all these theories about EOS recycling their own ICO proceeds into the ICO to inflate the number. So who knows what that really was? This we know for sure, like this is real. This is cold hard cash on chain.
Well, I just think there's also so much more cash on chain now that like
that is very true.
Totally.
I'm just like, how would there not be an EOS 2.0? Like it does seem like it's like inevitable.
All right, if you're listening, launch an L1 through an ICO.
No. That's not financial advice, as we've disclaimed on.
Not or life advice or life advice. So it's like the thing about Pump as well is that it's a working product. It's like a well-known, beloved product. to many people. I guess not, maybe less beloved these days, but whatever. It's a well-known product. So that does feel a lot healthier than the terrors of the ICO bubble. But like I guess the thing is there aren't that many. Like the reason why I'm of two minds about whether this is like, okay, the beginning of a new trend of these things coming is that I just don't know that there are that many pre-launch tokens that are to go around.
That size. I mean, there's a lot of pre-launch tokens at tiny sizes, but like the Pump brand and the Pump user base and the Pump gravitas, there's very few things that are launching that late in their maturity life cycle.
There's actually many things like Pump, though, that could do this in the sense of like Bonk, Axiom.
Well, Bonk's already
has
a
token.
Yeah, I mean the Bonk is.
Why? You're telling me you're telling me they have to stop at one?
Please stop at one.
Yeah, but there's also orders of magnitude smaller, right? There's a bunch of bots and interfaces that do have their own tokens that no one really cares about anymore. And
I think Axiom's actually quite big. Like I could totally see them doing.
No, right
why
now
would they not?
But like Axiom is the nth interface. I think.
I guess my point is more that like now that there's fervor, why would the second and third places not just immediately go do this, right? It reminds me in that way the ICO boom had this, right? Where it was like each time there's an ICO that was like oversubscribed, and you're like, why the fuck are they able to ICO? I'm gonna ICO. Like there was like this mentality, this like PvP like founder mentality. And the funniest thing is like the ICOs in the earliest part of the ICO boom are the ones that kind of survived, like the Gnosis, Lend, etc. Whereas the ones at the end, it's like it depends on how you define survival. I'm not sure that they survive.
Well, the other thing too, we were talking earlier in the year about, this new Echo and Sonar, Kobe's platforms defining the meta of community fundraising. That now suddenly seems old hat, where, we were talking about like, wow, they raised $20 million, $15 million. We just saw a $500 million fundraise and the exchanges were all oversubbed for just like, 50 million.
Fundamentally, the Pump one had a way to do non-KYC accredited investor raising, right? Like, how
no,
it was KYC.
It was all KYC,
but not accredited. Like with Echo, you do actually have to be accredited, right?
KYC and accreditation are very different.
Yeah, I don't think you need accreditation for a Pump.
I don't think you need accreditation. You need to be non-US, non-UK, and then like but I believe for Kobe's platform, you also don't need to be accredited in many jurisdictions.
Yeah,
I think that's true.
A US thing.
Yeah.
So. I mean, I think ultimately it's just like a size thing, right? Like doing Echo, doing Sonar, that's like doing like a seed round or like an A, and that's kind of. Sometimes it's the same terms of those rounds, right? Like Pump is almost like an IPO in terms of amount raised, maturity of the product, and so it's just categorically very different. And I mean, hats off to the team, pulled that off very well. I mean, kind of a huge moment for the industry, but I do maybe have some nostalgia for kind of ICOs in some ways, where like the whole idea, right, is it's a new way to do capital formation, and it's like crowdfunding. Anyone can buy in, anyone can credit you a vehicle for raising funds. This feels like I don't know what you're underwriting Pump to, but it feels like okay, this is like an IPO in that so many of the gains have already been had, and this is more like a large mature asset.
Yeah, I mean the thing that strikes me different than the first ICO wave, et cetera, is in the original wave, ICOs always came before the thing was ready, or the thing was functional, or the thing had a brand associated with it. This is almost like a late stage liquidity, private equity like thing, where it's like, okay, it's already massive, right? All the ICOs back in the day came before they built it. Like the Ethereum ICO is long before Ethereum existed. All the L1s was raising the capital to build
but if
it.
you look
Pump
at
is
like
mature.
the EOS. Yeah, but you look at the EOS ICO, like it was not priced as though it was like a seed round, right? Like, I mean, they raised $1 billion. If you remember the Tron ICO, also
I know,
huge.
but totally. Yeah. But that was venture backed.
Of the two of them, one of them actually delivered, and it's not the one that people loved saying at that time.
I know it's true. No, absolutely. I mean, the returns in the end were good over a long enough time horizon, right? But like, you have to remember at the time, it did not feel like, oh, well, these are these humble little seed rounds that people are raising from friends and family. Like the sense at the time was that these are basically growth stage rounds for things that are pre-product.
And that was a function of demand as well. Like the Ethereum
of course.
ICO was like this big in comparison. It was tiny. And when
But the
EOS
capital
came
on chain was
around,
also
when
this
Polkadot
big.
came around, when all those like L1s of the era came around and we're doing ICOs, the amount of demand was like so much larger in like multiple orders of magnitude that like it made sense.
Yeah. But the thing that I actually quite like about Pump, and I think that in a way portends well for this meta evolving in a relatively mature way, is the fact that Pump, like the post ICO pop, was pretty mild, right? So like it was up 25% after day one. Now it's up 50%, but markets on the whole is rallying. That's helped buoying the asset. And that's like a healthy pop. It's not crazy. People didn't make a 10x, they didn't make a 5x. It's not like, oh my God, I got to do, if I miss this one, if I don't do the next one, I'm going to be poor. So there's not this massive sense of FOMO around people who didn't get into the pump. But they got rewarded for getting in and like doing that. I mean, the fact that it sold out in 12 minutes is bad. Like clearly the fact that it was 3 days long means that they sort of underestimated demand, and they didn't, like, mechanically, you do not want to create these rush to the entrance type mechanics, because it just means more people are going to be fumbling over themselves and creating bots and syndicates and all this other stuff. Like it just makes everything way more complex and less calm. And I think like that calmness, maybe from the perspective of a company, it's like cool, builds hype. It's like whatever, makes you sound good. But for the industry on the whole, I think having those kinds of really just splashy mechanics, they end up making everything worse and more likely to blow up in the future.
Agreed.
That all being said, very well done to Pump on amazing coming out party. And the other kudos that we should give is to Hyperliquid. So one of the big stories around the Pump launch was the fact that Hyperliquid was the first to list Pump, not the first to list, but one of the first to list Perps on Pump. Almost all of the centralized exchanges listed Perps on Pump as well, including Coinbase, actually. So Coinbase International also had a Pump perp. But it looks like Hyperliquid was by far the most liquid venue to trade Pump. And so it got a lot of kudos and a lot of attention, and actually hit an all-time high in terms of overall open interest, reaching 11.5 billion during the period of the pre-launch trading for Pump. So most people who were hedging or just YOLOing some exposure to Pump in the pre-launch period was happening on Hyperliquid, which is, again, is a new, obviously for Hyperliquid itself, or for Hype, it's always been the most liquid venue. But for the first time, we saw it be the number one venue for a new asset, which is, I think, again, a new trophy that DeFi can take home, is saying, hey, all of a sudden we've got this new niche that may end up continuing to resonate down the road.
I think the Phantom Builder Code Hyperliquid thing happened at just the right time for this.
Right. So Phantom also announced that they were launching Perps, and these Perps are powered by Hyperliquid. So Hyperliquid seems to be firing on all cylinders, and Hype itself has recently hit all-time highs in terms of price. So a lot of the Hyperliquid bulls are sitting pretty. And there's also this treasury vehicle that's like 888 million that was raised for Hyperliquid. I think it was backed by Paradigm and a bunch of the kind of usual suspects. Yes, Galaxy, Parify, the usual treasury company guys.
Okay, can I just say a couple things about this? First, I thought it was hilarious that they made the merger company named Rorschach. Second, it's very hard for me to not view the more illiquid treasury vehicles as private holders dumping on retail. But is there a positive spin on these?
Wait, why is this the more illiquid? I mean, it's pretty big.
Well, I just mean that it's you subscribe in kind with the asset, you get shares in the company, and then you're locked up for 3 months. I mean, that just seems, it just doesn't I don't really get the point of the Bitcoin one. Actually, I'm just kind of okay, fine. There are these people who want access to this thing that's a high enough market cap. But Hyperliquid is a little bit weird, right? At the size it's at to be in one of these things, it's just compare, Solana ETH kind of can get.
Tarun, there's a few different arbitrages
here.
That's number 12. But there's a few arbitrages here. One is the average person would have no idea how to buy Hype, if not in.
What do you mean? You can buy it on Phantom. It's it is actually an easy to buy.
The average person is not using Phantom.
Yeah, come on. That's easy, but it's not really easy. So it does have an accessibility differentiator where it's if you're one of those TradFi people that you were talking about at the beginning of the show, they can access this in a way they understand. And I think that's a lower tier of sophistication.
So I get that for these like Vanguard type people, right? Because they're like, oh shit, we have to add MicroStrategy to our index because we're not allowed to buy Bitcoin because we're idiotic and our index
Correct.
methodology doesn't matter.
Absolutely.
But like, I don't get that. There's like some tiering of market cap at which that argument decays and it becomes just like, how do we? It's like SPACs. It's like Chamath SPACs. It's like dump on retail.
Totally. But there's multiple levels here, right? So
I
sophistication arbitrage is one. Okay, but there's also the inherent leverage. We've talked about this at length on prior shows. The fact that these are all levered vehicles is extra fun for all of the people involved, right? And frankly, there might be a liquidity differential between an equity and hype. So all of it sort of comes together.
Look, I kind of buy it, but like I'm just like, it just always feels like it's like a cheap.
Look, I think if there's any asset,
I'll give you an
argument,
anecdote.
Okay, I'll say this: any asset for which you can make the access argument, Hyperliquid is probably the number one asset that has access issues
versus
right?
Bitcoin.
Even if you're on Phantom, you can buy a perp. Right, buying a perp, like that's not buying hype. Like, what random person be like, great, let me open a derivatives position.
You can buy a hype perp on Phantom, right? So it's a hype.
True.
Okay. Anyway, I basically, I had this friend who is an AI and like never pays attention to crypto, thinks it's 99% a scam. But every once in a while he'll ask me. He's like, and he like happened to open his Coinbase account the one time a year he opened it and was like, "Oh wow, Bitcoin is up." I didn't realize that. And then he's like, "What happened to like what are like the top crypto funds investing in? Like that one that like invested in FTX with Sequoia?" And I was like, "Well, they're selling you a hype marketing vehicle right now." And he was like, "What does that mean?" And then I walked him through it, and he's like, "Isn't this just dumping on retail?" And I'm like, "This guy's one of the smartest people I know." And 2 seconds he says that without any of the other explanations. And I'm just like at a loss. I'm like, yeah, I don't really have much else to say about this. Like that. Yeah, you're probably right. Like, and I just, it's just like, it's hard for me to be very, I feel like it's a little demotivating sometimes to feel like this is the end game for all.
Do you make the same argument for SBAT?
At least SBAT's staking. It's like using it on chain. Like
staking? Do you get 3% a year? That's going to buoy retail's returns.
Look, no. At least they're like using it on chain. They're doing something. This feels like just
where's the cutoff? Is Soul Strategy? Is that above your bar? Is that below your bar?
I just am saying like at some market cap, these things suddenly become like.
I think this is very arbitrary. I think you guys either they're all bad or they're all fine. Like one way, like if you're not defrauding people,
he knows it when he sees it.
I just think if like really smart people outside of crypto are suddenly like, oh great, like I see prices up, what's new, what's happened, and then I'm like, oh this, they're like, oh it's even worse scam than last time. I'm like,
I
okay,
just
great.
told you that they hit all-time highs in open interest and they're doing all this great like that's what happened.
What am I supposed to say though when like that's the answer?
Tell
like
him that
I don't really have much else I can say. No. I will just say like the lack. Crypto certainly faces a talent shortage now, which is coming from
DeFi story. You got into this industry because of DeFi. This DeFi
treasury companies are not. No. Hyperliquid crushing is closer to DeFi.
Yeah, but so you asked why is Hyperliquid going up? The answer is that DeFi is winning.
But the treasury company thing, I think, is like that's the part where it's like, what can I say anything that doesn't make me like want to stab myself about the state of the world?
Okay. I mean, look, I agree with the overall sentiment that clearly these things can't trade above NAV forever, right? Like that is a financial alchemy that just cannot be sustained indefinitely.
I think Bitcoin I'm willing to agree because like if you own some index that has to add every asset above some market cap and you don't have a way of doing it and the ETF is capacity constrained in some weird, like I can't, there's reasons I understand that.
I don't know. I feel like that's a pretty tortured
These other ones,
defense.
the index providers aren't going to add them to anything, right? Like there's no hype stock going into like some mutual funds portfolio.
Not yet. I mean, everyone shows around.
Okay, Robert, tell me.
SBAT is right now the largest holder of Ethereum in the world.
Yeah, and MicroStrategy
owns more than the Ethereum Foundation.
Correct. MicroStrategy is entering indices. Like everyone's talking about MicroStrategy and the S&P 500 and all that
MSTR actually, in particular, is this arbitrage where it's like there are all these fund managers who are like, we'll never buy Bitcoin, but they also have mandates where they have to own every asset above a market cap. And MicroStrategy actually perfectly fits
Agrees.
But like,
So
I
instead of
think that's going to
dumping on
happen for
retail,
these
you're
lower
dumping on these like institutional investors. Isn't that the same? Like at the end of the day,
Yeah. Look. At end of the day, I would like to be able to say something like interesting or novel about this whole thing without someone smart just immediately being like, "God, you guys have just institutionalized scamming." Like, what do I say to that? I don't have a good answer.
we should get Saylor on the show and have that
Agreed.
too.
Michael,
Yeah.
if you're listening, come on the chopping block and explain to Tarun everything.
Why
Tarun.
I'm an
you're not
idiot. I'm
scamming
happy to sit
retail.
here. I'm happy to sit here and wear a dunce cap while you yell it.
Yeah. I mean, look, at the end of the day, if you're scamming pensions, like that's just some, retired firefighter or grandmother who's also at the end of the day, like if you're making money, someone's losing money most of the time.
Private equity has been
Finance.
scamming pensions for like 20 years.
God bless America.
I think I would feel worse if Hype wasn't actually doing something useful. It would be if it was like the ADA ETF, treasury strategy.
We've got
Tron.
I know.
We
got Tron going live soon.
But Tron's actually USDT on Tron is used. I can't get mad at that.
Where do you draw the line, Tarun?
So you like all the treasury vehicles is kind of the message I'm getting.
You've defended
They're
every
all
single
great
one
assets.
besides Hyperliquid. Yeah.
No. I don't mind. I think the Hype one is also. That one made me feel this way.
I think Tarun, you are toast once this episode comes out. All the Hyperliquid bros are
Every
coming
community
at
is coming
No.
after Tarun.
Hyperliquid itself, I'm just like, great. I own Hype. I totally get why it's an amazing asset, right?
But it doesn't deserve to go into a treasury vehicle.
No, it's just
the only
size. The size of the treasury vehicle relative to market cap is also kind of crazy. Right,
So
like
market
it
cap is
really
what, like
does feel
14,
like, hey,
15
everyone
billion?
just wants to dump. Yeah,
Market cap's like 15 billion, right?
yeah. So it's like 6 or 7% going in, which is a lot.
I mean, how much of Bitcoin is Saylor?
It's like 2.5%, 3%.
Yeah,
something
it's
like
not.
that.
Okay. So it's like
I'm just saying,
order
like
of magnitude. It's like not crazy.
yes, and that's after accumulating for how long?
Right.
So
Yeah.
I think like there's a little bit of like this greed thing that I'm like looking at these numbers. I'm like, how can I defend crypto anymore when I look at stuff like that? Like it's
Hold
like
on,
hard.
now is the time that you worry about defending crypto. Like I feel like the last 2 years it was pretty tough. Now I feel like all of a sudden my job has gotten a lot easier.
No.
This is Crypto Week in DC.
It's easy to people.
Tarun, it's Crypto Week.
This is Crypto Week. This episode will come out during Crypto Week after a bunch of bills have passed.
I will say, and then I think like one of the reasons you're seeing sort of like talent departure is because you can't explain this shit. Like it really is like anyone smart is like, oh, this sounds dumb. Like, how is this actually changing finance?
Listen, I agree that all of this crypto treasury stuff are exotic financial instruments that haven't really been seen or understood yet. Like society is still in the infancy of like trying to model out this like extremely exotic instrument of like, it's a company with like corporate finance and debt and it's levered. And then eventually the asset gets too big. And it's like, it's so complex that like no one understands it, right? But it doesn't mean that it's bad. It just means that in like 3 years, it'll be a solved problem.
Look, I'm not making a good or bad judgment. I'm making a like, how do I convince anyone smart that like, hey, this industry is doing something great? When it's like, oh, like why are all these prices up? I'm like, oh, because these treasury companies exist. Oh,
it's not. It's
they're
definitely
buying,
not solely because of the treasury companies. No.
I know.
do you really believe that?
I know. But no. I'm not saying. I'm saying. Then people are like, what are the new innovations? I'm like, okay, we have new perpetuals exchanges and stuff. They're like, okay, fine, but you had them before. They're slightly better. Maybe they're a little more open, right?
They're bigger. They're taking over the overall volume. That's the whole theory. Yeah, that's the answer. Bigger. Is that the businesses are working, more people are using stable coins, more people are on chain, more people are trading, there's more TVL. That's the answer. All the numbers went up and to the right. What was the difference between in Facebook from 2005 to 2015? The answer is mostly that there were just more people and they figured out how to sell ads to them. Like it wasn't, what was the big innovation? It's like, oh, we added images and videos now.
The newsfeed got better.
Yeah, exactly.
Maybe I'm just too cynical.
Tarun is the jaded member of our.
I think it's the problem with you, Tarun, is that the moment things are going well for you, you start reflexively finding things to be sad about. I think this is more of a Tarun thing than it is an industry thing. I think you need to introspect on like why you can't just allow yourself to feel crypto week in your heart and soul.
Yeah, that's it.
This is crypto week.
I gotta go like take some crypto week happy pills or something.
Okay,
Exactly.
so on that note, let's talk about crypto week so Tarun can feel a bit better. So this week is crypto week, according to President Trump. So President Trump has declared this week crypto week, saying that all Republicans should vote yes on the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance Act. So for a quick recall, the Genius Act is a stablecoin bill that recently passed the Senate, 66-30. It has gone to the House. The Clarity Act is the market structure bill that basically defines what is the CFTC going to own, what's the SEC going to own, what's a security, what's commodity, et cetera. And then the Anti-CBDC Surveillance Act, for some reason, is also part of the mix, which basically says that the central bank cannot issue a CBDC. Again, we've talked about this previously on the show. I don't know who cares so much about this. Every single Fed has said they don't.
Marjorie Green
Taylor Greene apparently really cares about it. Very important to her that the Dems cannot be allowed to launch CBDC, even though the Dems previously were also like, yeah, we don't want to launch CBDC either. Nobody should do a CBDC. But for some reason, this is just a big issue that needs to get litigated. So in celebration of Crypto Week, unfortunately, Crypto Week is not off to a good start. Beyond Tarun feeling sad, the House GOP failed to pass a procedural vote allowing the bills to proceed to a vote. So they were blocked 196-223. The reason why was that the GOP has basically said, and
the Freedom Caucus,
Speaker of the House,
not the
Johnson,
Freedom Caucus.
The Freedom Caucus.
I'm sorry, the Freedom Caucus. They have not allowed any amendments to the crypto bills, but the Republicans in the House really want to amend the bills and add whatever pet things that they feel like should be changed, as well as do some, potentially staple some of the bills together, include the CBDC Act and the Genius Act. And so basically there's a little bit of a civil war going on right now within the House. Unclear whether they're going to get their shit together and make the president happy. But so far, Crypto Week, a little bit shaky to see whether or not we're going to be able to get these bills passed over the course of this week. So very unfortunate. Sorry, Tarun, I couldn't cheer you up a little bit more with what's going on there. But as chief regulator, any thoughts on what we're seeing with Crypto Week?
CBDCs are just like such a weird issue in 2025, right? Like I feel like when Libra was launching and everyone was worried about that was the time people.
But that wasn't
like,
a CBDC. That was the exact inverse of it. That was a private company.
All the people loved using, like, so the European regulators were like, "Oh, Facebook's trying to take our money. We're going to make a CBDC." That was like the non-US side of this. But like, who cares now? Like, it just feels like the market has moved so far away from it. Like, none of these projects that were started seem to have any adoption. Like, the only things close to CBDC are like PIX in Brazil and UPI in India, which are like the, people. It's not like the average person in India is like thinking about it. They just like tap with their phone and move on with their lives.
But that's why we have to surveil the country to make sure that we never allow a CBDC. And that is the purpose of this bill.
CBDC at this point just means a retail-facing payment system that's run by the central bank. That's what CBDC means.
Yes.
Okay. There's no blockchain or anything. That's with all that is gone. Because PIX is like that preceded all the CBDC talk. So UPI.
Yeah, it's a digital currency.
We're now rebranding these CBDCs. Is that how it works? I genuinely don't know. I'm asking.
That's why we need the bill, Haseeb.
Okay, all right.
I mean, I think the one thing about CBDCs that I think I do sort of that people always argue about is like, oh, well, because they're centralized, you'll have some privacy and you're only surveilled by the state or whatever.
Oh, thank goodness.
And like that, there's a certain type of person like Elizabeth Warren who certainly like loves proposing things like this, but like none of her proposals ever get any traction. So who cares? Like it feels like a very PvP one-on-one thing that like doesn't, I don't know. It seems dumb. And also like, fine, include the provision. Who cares? Like I don't even think people are going to vote against it.
Who's against it? Who's like, wait. CBDC, like we have to preserve it.
I don't get that.
Yeah.
I don't know. I find it hilarious that this is even part of the conversation. But Robert, you're, I think, the more DC plugged in person. How do you handicap the odds here, given the infighting that we're now seeing in the House?
I think the odds are good, but not extremely good for all of this. I think no matter what, stablecoin is a certainty. Like I think because Clarity is a little bit newer and because CBDC is a little bit newer, the odds have to be lower. But I think the goal that's been laid out for everybody is that all three go together. And a victorious crypto week is had by all. And so I think if I have to like assign a probability to like all of it working, it's probably like 65%. If I have to assign a probability for like just stablecoins working, it's like 34%. And then there's like a 1% chance of like total outright disaster. That's kind of my like
Wait,
Bayesian.
can I ask you a second question, which is how much did that change? Did those numbers change prior to this vote today? How much did like you get an update?
I don't have like a super sophisticated Bayesian model for this, so like I don't have a good answer. But those are my current probabilities.
Was it like noticeable? Was it like, oh, like my probabilities went down 10%?
I actually think the probability that all three go together went higher, simply because of like the Freedom Caucus saying like it's all or nothing, you know, like we need CBDC, like it goes like together as a thing. So I actually think the probability of all three is going up a little bit, as opposed to just stablecoin.
Oh. Tom, any perspective?
Believe it or not, there is a poly market for this. Not a ton of volume, looking at 20K volume.
Speaking of poly market,
we will get to that. It is at 92% Genius Act signed into law 2025. Clarity is at 63. But Clarity only has $1,000 in volume, so I don't know if I would put a lot of
wait, so far these are pretty close to my probabilities.
Yeah, but $1,000 in volume is pretty, that's kind of a pittance. Let's see if we can get some more volume into that market. We'll revisit it next week and see how Clarity's doing if it's still not passed by then.
If you don't live in the US,
if you don't live in the US. Okay, so speaking of which, one of the big stories of Crypto Week, one of the only positive stories that we can point to in Crypto Week, is that the DOJ and CFTC have jointly dropped their investigations into Polymarket. So for those of you who are not familiar, and by the way, we're all four of us are investors into Polymarket. Polymarket is the largest prediction market in the world, founded by Shane Copeland. Polymarket was founded 2020, 2021. They originally had a settlement with the CFTC back in 2022, where they had a deal that had them geo-blocking US users, so they couldn't participate on the platform. During the election, there was a lot of speculation that American users were in fact using the platform, and this supposedly was this precipitated this probe into Polymarket, which also led to a raid on Shane's house personally from the DOJ. Now, all of these claims have been dropped. Polymarket now is free to re-enter the US legally if they can register or acquire a license. But this, again, seems to be vindication that whatever it is that happened to Polymarket post the election was likely politically motivated, given that they basically got him while Biden was still in office. And then now that things are, the administration has turned over and there's been a change in priorities, everything has been dropped and no charges are being filed. So awesome to hear. And again, a win for prediction markets on the whole. Tom, any perspective on this story?
Yeah, yay prediction markets. They give us content for the podcast, so I'm very pro prediction market just for that reason.
Was there a prediction market on this event happening?
I don't believe so, but I wouldn't put it past Polymarket to have a market for that. There's all sorts of good stuff in the far corners of the platform.
Yeah,
with $1,000.
Twitter was Twitter was very jubilant about this, given that this was such a it was just kind of a sad story to see a pall thrown on somebody who really, Shane kind of single-handedly created the prediction market industry. Obviously there were predecessors of Augur and of course Vitalik and many people in the early days. Robin Hanson, of course, being the original inventor of the concept, but Shane was really the one who made it happen, and he made it happen just pure blood, sweat, and tears, grinding for many, many years at a time when basically nobody cared until about a year ago.
Well, it wasn't even that. I feel like he still got in regulatory trouble for in the early days with a thing that was not super well used, because so I feel like he just stomached a lot of bullshit over the years in a way that I feel like very few people in crypto can really compare. And I feel like Robert and I have probably known him since 2017, 2018. And it's watching that evolution has been kind of also wild.
Yeah. No, same. Tom, when did we first meet Shane?
I think it was 2019. I think it was one of the first deals I talked to at Dragonfly. And yeah, Shane's just an OG as far as, OGs are still around. Like, the man just lives and breathes prediction markets. So I'm glad to see him moving on to bigger and better things. And to your point around kind of, I feel like Polymarket kind of dragging everyone kicking and screaming into the future. I saw today Predicted was also upping their bet sizes. They've been this like dinosaur OG that just has
For
absolutely
20
terrible
years. Yeah.
Yeah. And granted, some of it was regulatory, but like, oh, great. Now you can bet $3,000 on Predicted. And it just feels like I don't think that ever would have happened were it not for Polymarket's success in 2024.
Thank goodness. Polymarket really moved the industry forward. Now predicted as $3,000 betting limits.
By the way,
Thanks, Shane.
a fun fact is like one of the first ICOs in 2016 was Gnosis raising for a prediction market, but then of course they became a totally different company later.
Yeah, multisig, which is now SIG.
So the real question is, I'm curious about your predictions. If we think of the 2016 ICO era, like before the L1, everyone raised for L1s, whatever, where it was like all the ETH projects, consensus projects, like that's why Gnosis happened. And that set off the boom. Let's suppose Pump sets off the boom. What is the thing that is like caused that? So it's like interesting to think about prediction markets caused this 2016, were sort of the genesis in the 2016 ICO boom. And then now we have mature ones, right? That we're talking about. So what do you think will be like the mature technology that right now is speculative that will ICO in the next year?
Good question.
Sorry,
Are you
I wish I had
Polymarket?
it.
Like, what are you saying?
Well, because like I think like at that time it's Pump prediction markets. This time it's Pump.fun. So like, what does that imply in terms of like what will be ICOing over the next 6 months? Like, who are those people beyond the like obvious ones like the terminals and like the things that look like Pump.fun?
Yeah. There's not a lot of products that are at that stage. And the other thing too is that I have to imagine actually for a lot of these businesses, they might just be like, yeah, I don't know if it's worth it. Phantom ICO.
Good question.
It could actually make sense. That's the one that's always been I've been kind of like.
Yeah, I mean, there's been whispers about a MetaMask ICO for a long time. Not an ICO, but a token. And that hasn't materialized, and it's been so many years.
Speaking of which, what happened to the OpenSea token? Was this not
Yeah,
a story?
I totally forgot about it.
Yeah, good point, Tom. I need some OpenSea tokens.
Dude, forget about OpenSea token. Congratulations to OpenSea co-founder Alex Atala for making another very large business. Actually, OpenRouter is like crushing it. So I feel like I think
he doesn't need the token.
He doesn't need the token.
Yeah.
That's why there's no token.
That's right. Cool. Well, so speaking of tokens, the other big story that I wanted to cover was just
today.
Yeah, I know. There's been just crazy rally in alts over the last week. So we've seen a bunch of tokens hit huge numbers, just going since basically the last month. Pengu is up 270%, Stellar is up 94%, Say is up 85%, Algo up 74%, Sui up 60%, ARB up 55%, ENA up 45%, Uni up 43%, and BTC, of course, hitting all-time highs. Interestingly, Bitcoin has not hit all-time highs in euros, but has hit all-time highs in dollars because of the fact, of course, that the dollar index has been so weak this year. The dollar index is down like something 10% relative to a basket of other currencies. So, but long story short, markets are feeling very strong. Stock market has hit all-time highs. So things are firing on all cylinders, at least in the US. It's interesting to me because I've always been a little bit skeptical of a lot of the people who've been saying that, oh, alts are cooked, it's kind of over, there's never going to, now it's like revenue meta forever, and anything that's not making money is just going to be, dropped like a hot stone. And now it's just kind of back to usual. Is that, okay, well, here we go. Hashgraph is pumping and Pengu is pumping and, whatever. Don't forget about whatever you were saying last week. Now it's just kind of back to momentum trading.
Yeah, I mean, there's a lot of questions about what gives certain crypto assets value. And, it's the same conversation of what gives Bitcoin value. Like when there's no cash flows, you have to use alternative mimetic valuations in a different way, where it's very different than fundamental TradFi analysis, right? So yes, there's a moment very recently where it's like, it's all about that cash flow. And there's also the classic crypto, what cash flow? There is none. There doesn't have to be any. It's totally different.
It seems like, I think it was Tom Lee who's been telling the story about Ethereum that, what's the thing? It's like the digital, did he say digital oil?
Yeah.
But it's like, oh, Wall Street has to buy this in order to validate and secure their own stable coins or something like this.
They don't.
Do you guys know what I'm talking? Yeah, exactly.
Yeah. They're going to buy ETH for stable issue, but like it's working. Like people are, it's sticking with people for some
totally
reason.
Working.
I don't,
exactly.
I've been hearing this
oil meme.
This has been a meme back to like 2015, though.
Yeah. I remember the early days.
It's repackaged. It's refreshed. It's now, Tom Lee's put a fresh painted cone on
Honestly,
it.
the Tom Lee dancing to the ETH thing memes are pretty funny. I'm going to be the first one to say. You should go look up the Tom Lee dancing memes. They're pretty funny.
Okay. But I think it's, again, a sign of the times that like we just needed, for Ethereum and for alts to start making your comeback. I think ETH so far has actually outperformed Bitcoin on this rebound. And a lot of this, I think, is due to this storytelling. Well, SBET is probably part of it, but also the storytelling that I think Tom Lee has kind of taken up the mantle and said, hey, here's a way that we can repackage this narrative that Wall Street's going to buy. At the end of the day, if people buy it and it's working, it's hitting, doesn't really matter if it's an old narrative that's been, kind of rejiggered and brought into a new form factor. I kind of expect that to continue. Like the one thing that's kind of odd is how much Solana's been lagging. Solana seems to have been kind of the laggard, despite the fact last year it was absolutely explosive. And even beginning of this year, it hit all-time highs of over 300 when Trump launched his meme coin. It's still like 160 something, right? So it's like half of where it was when Trump launched Trump token. And
I mean, the anecdotal evidence I will tell you, the anecdotal evidence is like the DGen group chats I sit in have all been like, don't hold Sol, hold Pump. It has Sol beta, which has been like a funny in like the last 24 hours. This is why I've seen like multiple places people saying stuff like this, which is like kind of.
Do you want the Sol beta though?
I don't.
Do you want the Pump beta?
Look,
I'm just parlaying.
This has not worked well on Ethereum. Anybody who's holding an asset because they thought they were getting ETH beta got crushed.
Agreed.
Yeah, that's true.
So.
I mean, I do think hype kind of took a lot of the fervor from L1s outside, like non-dinosaur L1s outside of Ethereum. There's like the same. So like, I think like in some ways, the market does really view Sol and hype as direct competitors and seems to evaluate them.
Of course they are. Yeah, they are like.
Yeah. But I think like there was a time where people were trying to make a story that they weren't.
Do you hold on? I don't know that I agree they are. I mean, Hyper EVM obviously is a different story, but Hyperliquid itself being a competitor to Solana?
Yeah, I think they totally are. They're both chains that people go to trade.
Is Binance a competitor to Solana?
In a way.
Okay. Well, like what degree? Okay.
I look. I'm not saying they're like one-to-one competitive, but I'm saying that like there's a sentiment amongst investors that if I think of the fees, if you care about the revenue story,
right,
and people are like, look at the fees, there's the fees wise, like you flip from one to the other at high enough market cap.
Correct. They have the same use case for the majority of the use that's happening there.
Right.
Minus token issuance.
The fees argument, the fees argument on Solana was always a little bit tortured relative to the fees argument for Hyperliquid, which is just very straightforward because it's pure buybacks, right? So like the economic value is directly getting delivered to token holders. Whereas for Solana, it's like, well, this is like a measure of their willingness to pay for Solana transactions.
I'm gonna get hate for this comment, but I
okay,
it's fine.
You've already built it up this whole episode.
Don't worry. The Hyperliquid stuff you already pulled up for the show.
So you remember back in the day when like all the like L2 teams would constantly be fighting on Twitter, but like no one had a launched L2, or like the ZK teams would fight, and they everyone like invented a particular metric that like made their thing look really great, but like other people's worth, whatever. I feel like the mini bear market of this year of like everyone fighting over revenue versus like rev versus transaction fees, like ETH transaction fees versus Solana rev. So it feels a little bit like that, where like everyone was like so focused on like figuring out the metric to do Goodhart's laws on that they like forgot that they had to go like compete against this new chain.
Yeah, I mean, it's always my bags are better than your bags. Like, so I'm going to use my metrics instead of your metrics. Like, it's all silly.
But the problem is Solana chose a metric that then they kind of got like beat on in some. And I don't think it's really beat on because they are not totally fungible. But I do think to the average token investor who is like trading the revenue meme, they are fungible, right? They don't care. They just like look at those as like a flip.
Yeah,
Totally.
fair enough. Okay, well, we are up on time, so we got to wrap. But next week, we will be coming back to talk about Robert's liquor store. So tune in for that. It's going to be very exciting. Till then, we will see you all next week. Stay safe, everybody. Enjoy Crypto Week.